Welcome back to REIQA.com Real Estate Education Program. Be sure you started with the welcome video and have already completed sections 1 through 16. In section 17, we will discuss short-term rentals. Please subscribe to our channel, like this video, and ask any follow-up questions in the group. Our experienced investors will respond throughout their days to help you. Check out our website at REIQA.com and the links in the description below for more real estate help, tools, and resources. Now, let's begin section 17. One of the popular strategies that has really blew up over the past 10 years is short-term rentals. Short-term rentals refer to properties that are rented out for a period of time that is shorter than a traditional lease, often for a few days or weeks at a time. With so many tech companies like Airbnb, VRBO, and others starting over the last decade, it has simplified the marketing of available properties and collecting payments for landlords doing short-term rentals. Because of that, many more mom and pop landlords have now started doing short-term rentals on some of their properties. There are several different types of short-term rentals, including vacation rentals, event rentals, and corporate rentals. Vacation rentals are properties that are rented out to travelers for a period of time, typically for leisure or recreational purposes. Vacation rentals can range from small apartments or guest houses to larger homes or even entire villas. They are often located in popular vacation destinations, such as lakes, beach towns, or ski resorts, and can be a more cost-effective and convenient alternative to staying in a hotel. Event rentals are properties that are rented out for specific events, such as weddings, conferences, sports events, or other large gatherings. Event rentals can be anything from a small home or guest house to a large mansion or even event venues. They are often selected for their proximity to the event location, as well as their size and amenities. Corporate rentals are properties that are rented out to businesses for their employees or clients to use during work-related trips. Corporate rentals can be anything from individual rooms to a small apartment or guest house to a larger home or even a whole corporate retreat. They are often chosen for their convenience and proximity to the business's location, as well as their amenities and comfort level. Overall, short-term rentals provide a flexible and convenient alternative to traditional long-term leases and can be a great option for travelers, event planners, and businesses alike. Investing in short-term rental properties can be a lucrative opportunity, but it's important to do your due diligence before diving in. Here are 10 things you need to consider before investing in short-term rentals. 1. Location, location, location. As with any real estate investment, the location of the property is crucial. Look for areas with high demand for short-term rentals, such as popular tourist destinations or areas near major events, colleges, or conferences. 2. Research the local market. It's important to have a good understanding of the local short-term rental market before you invest. Look at factors such as the average daily rate for short-term rentals in the area, the occupancy rate, and any local regulations or restrictions on short-term rentals. Many cities and HOAs have rules against short-term rentals. 3. Consider the property type. Short-term rentals come in all shapes and sizes, from entire homes and apartments to individual rooms or shared spaces. Consider which type of property will best suit your investment goals. 4. Understand the costs. Owning any rental property comes with a number of costs, including property taxes, insurance, maintenance, and marketing. But short-term rentals can have more expenses including furnishing, dishes, utensils, supplies, utilities, cleaning, and management. 5. Have a plan for managing the property. If you're planning on managing the property yourself, be prepared for the time and effort it will require. There's a lot more to managing short-term rentals, like providing access, cleaning, handling complaints, etc. 6. Know the risks. Investing in short-term rentals carries its own set of risks, such as fluctuating demand, property damage, and the potential for negative guest experiences. It's important to be aware of these risks and have a plan in place to mitigate them. 7. Choose the right platform. There are a number of platforms available for listing and managing short-term rentals, such as Airbnb, VRBO, and HomeAway. Each platform has its own fees, terms, and policies, so it's important to do your research and choose the one that best fits your needs. 8. Set the right price. Pricing your short-term rental competitively is crucial to attracting guests and maximizing your profits. Look at the rates of other comparable properties in the area and consider factors such as the time of year, local events, and demand when setting your price. 9. Market your property effectively. Marketing your short-term rental is key to attracting guests and filling up your calendar. Consider creating a professional listing with high-quality photos and a detailed description of the property and its amenities. You may also want to consider using paid advertising or offering promotions to drive bookings. 10. Offer a great guest experience. Providing a positive experience for your guests is essential to attracting repeat business and positive reviews. Consider offering thoughtful amenities, such as fresh linens and towels, basic kitchen supplies, and information about the local area. Overall, investing in short-term rental properties can be a great way to generate passive income, but it's important to do your research and be prepared for the risks and responsibilities that come with property ownership. Next, let's look at a hybrid short-term rental strategy called rental arbitrage. Rental arbitrage is the act of renting a property long-term from the landlord and then re-renting it as a short-term rental, basically running Airbnb units by sub-renting instead of actually owning. I looked into it heavily a few years ago as a lot of people were pushing programs on how to do it, and when I did my due diligence and looked at the potential negatives, I passed. From my evaluation, here's the many cons of rental arbitrage. 1. You're responsible for any damage done by sub-renters. You're renting the property yourself and subleasing as Airbnb, so it's your name and reputation on the line in the event of property damage. 2. It is very hard to find landlords willing to allow it, and even if you do, the HOA or city may not allow short-term rentals. 3. Your landlord can halt your operation at any moment if they no longer want to continue and you're still locked into the lease. In my opinion, it's not a very good strategy, unless you actually own the property and do traditional Airbnb short-term rental instead. Owning the property just makes more sense and is cheaper than leasing and builds equity. That concludes this section. In the next section, we will discuss real estate syndication. Please subscribe to our channel, like the video, and ask any follow-up questions in the group. Our experienced investors will respond throughout their days to help you. Check out our website at REIQA.com and the links in the description below for more real estate help, tools, and resources.